Hey everybody, this is the continuous crude oil chart again. We're just going to continue to look at this while we're in this large wedge formation to see where we're at in the big picture. As you can see, we're still respecting the uptrend and we're still respecting the downtrend. And we're going to continue to look for more longer term moves to sell against the downtrend. And we feel that crude oil is probably going to see some pressure develop in the fourth quarter if equities take a larger turn down. Something that we've noticed is that this equity market's been making almost some monthly moves. You'll have a strong move higher for the month of September. You go back to August, which is more of a down month. July was definitely a strong up month for the equity chart. So if this stock market starts to take another downward move here, that could be the fuel that we need to see this crude oil get down below some of these recent lows. And if that's the case, then we might have some longer-term objectives closer to that $60 a barrel area. But until that happens, you can see this is the November crude oil. This is your front month. We did fail at what is currently the downtrend from the highs that we had most recently back in, what was it, early August. And if you're an aggressive seller for crude oil, you're going to look to sell this 20-day moving average, which is in red. And if you want to be more of a conservative seller in crude oil, you're going to want to look to sell this long-term downtrend, which would actually come in right around a retest of these mid-September highs. So our recommendation on the advisory report right now is to sell crude oil at 78.45. If you're going to be a little bit more aggressive than that, if you're a crude oil bear or an equity bear, then you probably want to look to establish a short position somewhere near today's highs and look for at least a short-term pullback down near the $73 area. That seems to have been catching us. If you want to be a day trader in this market and you want to look at the buy side, you can continue to look near that $72 to $73 area as a spot to buy. But we definitely don't want to get married to those positions, especially if we start taking out some of these lows. We'll probably see a retest of the 71.50 low. Other than that, this is the continuous dollar chart. And we're looking at the continuous chart right now because the actual December chart, we're in some uncharted territory for this specific contract. So we have to look at the continuous chart for some cues. And as you can see, there's an overwhelming downward trend that we're looking at right now. And the bottom of the market that we put in back in 2008, this uptrend really wouldn't come in until around the 76 area. So this market could still come down another 300 points before testing our uptrend support. And as you can see, it looks like we took out a key area of support right above 80 on last week's selling off of the Federal Reserve. So at this point, we're going to look, if you're trading the chart right now, you've got to be looking at selling rallies, and your first area of resistance to sell against would be the roughly 80 to 80.15 zone. And looking for a potential move down near 76 here longer term if this trend continues.